morning, hello, welcome along to our daily live stream for the London session here at FTUK. Hope you are doing well. I haven't done a live stream like this in quite a long time, so it's really interesting to get up early and start looking through the news wires to see what has been happening overnight. Hope you are doing well and you've had a good weekend. This is our fundamentals week here at FTUK. We're going to be covering all of the markets in as much detail as we can over the course of the next few days, really pushing into non-farm payrolls on Friday. We've got some fantastic offers as well for you. We are sponsored by Newsquawk and the Trusted Prop all week, so we've got like Newsquawks to give away, free accounts to give away, all sorts of stuff, big discounts on all of the prop accounts as well. So what's the purpose of this? Well, the idea here is for if you are a prop trader and you are looking to pass your evaluation, you can get a big edge from understanding how the market dynamics are working. So it's not just about the candles that move on your charts. It's not just about the strategy that you managed to perfect over the course of a 6-month period. If you can understand what's driving the markets, you get such a massive edge from that. And it's all about just highlighting that a little bit. Some people will really love it. Other people, I don't know, it takes a little while to get around to it, but I guarantee you that anybody that is into markets, you'll have to grapple with the fundamentals, and it's not that complicated. I'm going to very slowly show you how all of that works. So what we'll do straight away is we will get into looking at all of the over the weekend news that has been out and has been sort of, influencing the markets. There's no question that, let me just bring up my news thing here. Not that one. That's I've got about 25 different buttons to press here. So yeah, that's what I wanted. There, as always, Discord. Head over to Discord, scan the QR code, and make sure that you join our Discord community. That is the first place to find out all of the offers. Right. So let's move in and let's talk about what's been happening over the weekend, because we've got several markets that have shifted in quite a meaningful way. I thought it was going to be quite a nice, easy start to the week, and it's a light session today, but it's not going to be an easy start to the week in terms of what the market has got to digest and absorb. We'll start in the Middle East. Now, in the FT over the weekend, Iran's supreme leader signaled a measured response to Israel's attack rather than an immediate reprisal. On the BBC as well, the IDF, that's the Israeli Defense Forces, they targeted missile factories and other sites near Tehran and western Iran early on Saturday in retaliation for Iran's missile attacks earlier in the month. Now, that in itself, there's no new news about the conflict. It's all about escalating and de-escalating, but the reaction in the market is what you've got to connect together here. Now, that's resulted, those actions over the weekend has resulted in a 5% drop in the crude oil market over the course of the weekend. Let's just quickly take a check on that, and you'll see what I mean. There, that massive gap down there, that is as a result of that. So if you're an oil trader or if you're an energy trader and you're looking at your accounts this morning, my goodness me, we've opened lower, yeah, then that is the reason for that. And what you can do is you can connect the size of that news event with that amount of price action. That tunes you in with how the market is moving in relation to the news. So throughout the week, you start to think about how that level of news is going to influence the price action, or what it could potentially mean in terms of your trades and your moves. So that is a 5% move. Let's just measure that from the top to the bottom. 5% in crude, yeah, well, actually 5.69%. So massive move in crude oil. Now, I think overall that we'll be looking for lower prices from here in crude, and obviously you can get some sort of a pullback in over the course of the day, and that will be usually where those kinds of like traders will be looking to then start to short those tops, and you'll be looking for an extended move lower. It just shows you how powerful that news can be connecting with the price action. So that is the crude oil market. Let's move on and let's talk about what's been happening in Europe as well. We'll fill in some of the stuff that's happened over the course of the weekend with Europe. Remember, there's always an ongoing cycle of dialogue out of the many people that are sit on the ECB. We've got a couple of them worth noting today. That's the ECB's Not and Nagel as well. Both of them are hawkish. on that side of the spectrum for the ECB, not said that the Eurozone economic situation is not great, but not as bad as people say. Well, that euro dollar rate is pushing to the downside consistently, and that's obviously coupled with a lot of dollar strength, which we'll get onto when we talk about the election. Also said as well, it's important we keep all options open in rates, need to take a meeting by meeting approach to preserve options on rates. That is your data dependency, moment to moment data, meeting to meeting type of approach, which is a non-committal thing on forward guidance. The market has brought down forward rate, the forward rate cut path. We'll have to see in December if that was over enthusiastic. Nagel as well, also active over the weekend. He's the Bundesbank president. We should not be too hasty in adjusting policy, should do what's necessary based on new data in December, the data including the US election, new inflation readings, and fresh economic projections. Everything is going to be focusing around the US election, which is going to be happening next week, and that's going to connect with non-farm payrolls. And over the course of the week, we're going to be doing 2 live streams today. I'm going to show you how all of that fits together. So we've got a lot of emphasis on non-farm payrolls today. This week, but it is going to be overshadowed by the US election. So we'll break the whole thing down and make things nice and simple for everyone, because none of this stuff is really complicated when you get used to it. It's all accessible. As well, in Europe as well, Moody's have released their ratings on France. This is the ratings company. They obviously then give you an indication of how stable that government debt is. They've affirmed the rating at AA2. Changes in the outlook from negative to stable. Morningstar on Italy as well. They've confirmed ratings at BBB, so you can see distinctly lower from France. Changes trend to positive. Positive trends reflect view that improvements in expected medium-term fiscal path mitigates risks over public debt ratio. Well, what does that mean? Well, Giorgia Meloni has done a much better job in Italy than I think most people were potentially expecting. But as soon as you hear the word fiscal, it's dead easy. It's just a posh word for tax. Yeah, so every time you hear the word fiscal, it means tax. So some of the statement like that, positive trends reflect the review that improvements in expected medium-term fiscal paths mitigate the risks over public debt ratio. So basically, you know, the amount of fiscal, what you're expecting the tax path to be over the medium term, that is relatively in line, and that will then mitigate any risks that we've got in the discrepancies that the government has got to spend. Stability, that's what he's basically saying. So also as well, you can notice with these kinds of like readings over Europe as well, is it highlights a very key point that every trader should remember, and that is that in Europe, it's not the United States. So you see we've got an AA2 rating from Moody's for France there, but we've got a BBB rating from Morningstar for Italy. So that shows you the discrepancy. Italy and France and Germany and Spain, they're all different economies and they function on different levels. So the connective tissue between those countries in Europe is always different from it is in the United States. And that you can get any fracturing, any problems. That's why Europe is incredibly sensitive to that type of thing. Okay, let's move on. Let's talk about the United Kingdom. Obviously, there's it's a big week here in the UK as well. We've got a budget. I think it's Wednesday. I think it is, and that's going to be something that we'll get into a little bit more detail on Tuesday and into Wednesday as well. Rachel Reeves has got a big job on her hands. The Chancellor will raise the employer's rate of national insurance by up to 2% and cut the threshold at which employers start paying the tax, in a move that will cover about half of the 40 billion funding gap that she's trying to fill. So it's a difficult balancing act, and there's no question that the situation in the UK is that you get that budget wrong and the markets will punish you. And if you want any sort of like confirmation of that, just have a look at, let me just show you. For anyone that was around in markets a couple of years ago, you will remember exactly what this was and how it happened. You can see here on my chart here, this is the pound against the dollar on a daily time frame. That move there, that was a sort of like a mispriced budget where the market could not figure out how all of the spending plans were going to be paid for. And that's the punishment that the government went, and Liz Truss had to resign as well. Gilt market dislocated, the pound tanked as well. That's a huge, great big move. Anybody that was around at the time will remember that event. And obviously Andrew Bailey, the governor of the Bank of England, had to come in and stick it all together. So yeah, if you get it wrong, and that is going to be the consequence. Now, I don't think the Labour Party is going to get it wrong in that sense to that extent, but there's no question that they're going to have to do something to make sure that everything balances. And we'll get into that in detail over the course of the next couple of days and just get that all filled out. So let's just go back and finish off what Keir Starmer as well, because he was talking over the weekend as well. Again, this is from the FT over the weekend. We'll pledge today to embrace the harsh light of fiscal reality in the budget to move Britain out of decline and provide a better long-term trajectory for the UK economy. Okay, well, typical political kind of rhetoric you would expect there. Also, just note as well out of the UK as well, Lloyds, they publish a monthly business barometer that is 44 versus 47 on the previous reading. They've reported many companies remain more confident about their own trading prospects. Increased hiring intentions suggest more employers want to grow their workforce. Okay, well, we'll see how that maps out over the course of the week. The budget is going to be a big mover, so there's going to be a lot of opportunities in the pound this week, that is for sure. Whether that's against the dollar, whether it's against the yen, or any other cross currencies that you may be interested in. Let's talk about the United States. There's not much news out of the United States, considering that we're in the height of election fever at the moment. This is from Nick Timiraos. He's the Fed whisperer. He's the guy that everybody pays attention to, saying that both presidential candidates have big spending plans, but economists say that Trump's proposals carry the greater risk of stoking price increases. Economists warn of a new inflation hazard after the election. Now, this is the narrative that we're going to take into the election. And again, I want to put a presentation together about this. But the market is expecting, or is starting to price in, a Trump victory. There's a lot of hedge funds starting to position themselves for that. And it's not really a stock market play. It's actually an interest rate play and a dollar play. And you'll notice that the dollar has started to gain quite a bit of strength over the course of the last couple of weeks. Let's just bring that dollar up now. Actually, I broke down some of this price action. Now, obviously, we're not going to do a huge amount of detailed analysis, but this is a daily time frame here, and you can see the journey that's been on. Now, the important bit on the dollar, this is you've got to have a view on the dollar. You absolutely always have to have a view on the dollar. So I would always start with the dollar index. That's your proxy. That's a summation of the dollar against a lot of the other currencies as well. And that index gives us a heads up on relative dollar strength and relative dollar weakness. It's really started to move. Now, this is considered to be a Trump victory move, which is basically a hawkish type of a play, which is stocks up, dollar down. Stocks down, dollar up, and you can see it there. Now, a lot of that's priced in, but it comes from the fact that Donald Trump is seen as inflationary. Why? Because he's very pro putting tariffs on everything, which is essentially trying to make things increase prices. Yeah, so it's gonna be more inflationary. Now, the Federal Reserve is not expecting that, because we've now peaked in interest rates in the United States, and we should be now starting to trade to the downside in interest rates. So anything that's gonna come along and it's not dovish and it's hawkish and it's gonna be inflationary is gonna really put a cat amongst the pigeons with the way that the Federal Reserve wants to navigate. So that in itself is gonna be a potential problem. Now, in terms of dollar strength from here, there's new money. I've been doing some research. I'm a follower of Commitment of Traders. That's I follow the commercial hedgers. They're the smartest guys in the markets. And when they start to do stuff, that's when I really pay attention. Now, this area here from the 15th of October, that is where they're saying that that's the most extreme amount of positioning in looking for the dollar to weaken from here. So the fact that it's not, and we're holding above that area, for me in the election and towards the end of the week and then into next week and the subsequent weeks, that is going to be the area that I'd want to play the dollar from. This is the area that basically what I'm trying to say is I'm not looking for the dollar to be pushing down towards these 103s. If anything, I'm looking for the dollar to continue higher from here and get up towards those 105.50 areas at the top end of this area of support up here. So the way that the market is viewing the election at the moment is that Trump himself is considered to be inflationary. Now, we'll get into it in a lot more detail throughout the course of the week. You can't obviously then ignore the fact that the yen is a massive component of this, and this is probably the biggest news this weekend, and that is that Ishiba, the new prime minister, called a snap election. Not gone his way. It's not gone his way, and that is uncertainty in the Japanese yen, which is considered a safe haven currency. It's quite a ragged journey in the yen at the moment, and it's not ideal, put it that way. The Liberal Democratic Party got a very difficult verdict from voters. Need to go ahead with various measures, including compiling extra budgets and economic stimulus packages. Not thinking specifically about a new coalition at this very moment. They lost the lower house majority, and that is a less hawkish Bank of Japan. The general election results, the coalition was 215. They needed 233 to get the majority, and NHK have reported as well that Japan's opposition parties win combined 234 seats in the lower house, with 24 left to be counted. Confirmed the LDP's losses of a majority. They need extra budget and a new economic package. That comes from Ishiba as a result of that. Now, let's just have a look at the dollar against the Japanese yen, because let me just bring it up here. You can see here, we're at a really important inflection point. You can see, look at the gap there as a result of the election. So again, what we're saying is take that sense of what's happened, an unexpected election result. They weren't expecting it. It was a snap election. Look at the market reaction in dollar yen off the back of that news. You can measure it. That is how you start to connect fundamentals with price action. So instead of saying, oh, we just gapped higher on dollar yen this morning, let's see what happens, you understand what's going on in the world and how the markets are pricing that in. That is the important bit. So let's just take that down to a 1 hour time frame for a second. Now, much of that is coming back off at the moment, but you can see it there. So unexpected election, I can say in my mind now, equals about 80 pips. That's it. So it's not a huge market reaction. It's certainly not a dislocation. But there's no question that the trajectory for dollar yen at the moment, if anything, is going to become more ragged from here. And it's very difficult with that kind of a result if we're looking for the Bank of Japan to be less hawkish. And let's face it, the Bank of Japan have not been hawkish for decades. And we were on a process of slowly moving away from being ultra easy in our monetary policy. That's now kind of just, it's just sort of like, put that story to bed a little bit, because the carry trade is still well and truly in force. So if anything, really, this is a massive area of support here. And you can see we closed the week above there. This is the 200-day moving average as well. We're above there as well. So the volatility around here is going to I think is really just going to cause more support in this area. This is a daily time frame. So you can't help but look at dollar yen, other than saying at the moment, given the interest rate differential, given the fact that we're not going to get a Bank of Japan that's going to be normalizing rates, and they were going to do it slowly anyway. I can't see how dollar yen is going to start to turn the tables, and I could honestly say that within the course of the next few weeks with the election, particularly if you get any uncertainty as well, is that you could end up with the dollar and the yen just pushing a little bit higher up to here, and we could be looking at those 160s again, maybe even before the end of the year. I can't see lower prices at the moment in terms of dollar yen. Right, let's have a look now at a quick scan of what is going to be keeping us busy throughout the week. The actual data for Monday is going to be pretty light, although it's quite a busy start to the week in terms of news. The data that we're going to get is going to be light. And again, fundamentals is really accessible as a subject, because There's only a small carousel of this stuff. It does not just keep going and going and going. You see the same things over and over again. You're going to get an employment rate from every country every 4 weeks. You're going to get a GDP reading. You're going to get inflation figures, those things. So you get used to that. What you've got to do when you're starting is you've got to just understand what's coming up. And so this is a really easy way of doing it. Just write down the big key events that the market might potentially focus from. So we've got unemployment data in Japan later on in the session today. Tiff Macklem, the governor of the Bank of Canada, he will be speaking. He's speaking several times this week. So Canadian dollar is obviously sensitive to that. De Guindos, he's going to be a speaker for the ECB in Europe today. And then we're going to have Dallas Fed Manufacturing Index in the US later on. So not a great deal happening in the US today, but that will obviously change as we go throughout the course of the week. Tuesday is a little bit more active. We're going to get GfK, that's private data consumer confidence readings. That's specifically for Germany on Tuesday. Bank of England consumer credit is going to tee us up for the budget as well. Mortgage approvals as well in the UK. Another Macklem speech. And then the Case-Shiller's home price index as well out of the US. And the first of the important jobs readings, we obviously will cover non-farm payrolls in a lot of detail. That's the first bit from the Bureau of Labour Statistics. That's the job openings and labour turnover numbers. They are going to be printed on Tuesday. So that is where the data starts to get more important for the United States. Wednesday is going to be much more active. We're going to get Australian CPI and then Japanese consumer confidence and industrial production. So that's going to be, given what's happened over the course of the weekend, that's going to be important to have a look at. We're going to get French GDP, German GDP and inflation data. Then it is all eyes on the House of Commons in the UK for the October budget. Get your trades ready on the pound. That is going to be very active. GDP data out of the US later on. Pending home sales and the all-important ADP employment change. Although the market doesn't seem to see that as being as important as it used to be for some reason. I'm not quite sure why. That is the private jobs data out of the United States. And then our big European central bank speaker will be Schnabel as well on Wednesday. Into Thursday, it then starts to really get ramp up into Friday. We're going to get out of China. Probably the biggest information out of China this week is going to be the NBS manufacturing and non-manufacturing PMIs. That's Purchasing Managers Index out of China. That's going to be important. We're going to get an interest rate decision out of the Bank of Japan. That's going to be interesting as well. So this is where you can get an extra volatility around the Japanese yen. Out of Europe as well, we'll have inflation and core inflation data as well, and the unemployment rate as well, and the core PCE, that's the Fed's favored inflation measure out of the United States on Thursday. And then into Friday, which is our most important day, that is there's a whole some stuff out of China, the Caixin manufacturing PMIs, UK housing, and then also the non-farm payrolls is going to end the week before the election, the week after. So yeah, gosh, this is a week that ramps, and it's supposed to. That's the way that it works, and you get used to the flavor of how these things fit together. If you've never approached the news and the data before, this week is a really good week to do it, and it's a good week to do it with us at FTUK. We will definitely put as much information out about it as we can. Now, this is the important stuff that I've got to just highlight what we're doing throughout the course of the week. We are sponsored by Newsquawk. They give you a real-time audio Squawk feed throughout the week, throughout the trading weeks, signposting all of the key stuff that's happening in the markets. So they do the hard work for you. Now, we've got a free trial of their services here for everyone at FTUK. For everyone that's buying an account, the code that you're going to need is News35. That's the one that's going to unlock that for you. You're going to get 35% discount off the accounts. You get the news trading add-on thrown in there on 1-step and 2-step evaluations, and we will get you emailed the login details for the audio Squawk. I will show you very, very quickly what that looks like. This is it here. You can see it there in front of you. So I've got that on the screen. That's all of the data. I've not got the audio working at the moment. That's up at the top. But that's basically the feed that you will be given, that you'll receive on your desktop. So that will keep you in the loop as things are happening. Also, as well, what we will be doing is we'll be doing live streams twice a day. We'll be doing an 8 o'clock London session one, and then as the US markets open, we'll come back on and we'll recap everything that's happened, and then just tee everybody up for the US session, highlight the important things that are going to be driving driving the markets in the US session. Also as well, so that's it. That is the offer, a 14-day trial of Newsquawk, 35% off 1 and 2 steps, and the news trading add-on. News35 is the code that you want for the coupon entry field on the checkout, and that will unlock all of that for you. And what we are also doing as well is we're ramping into non-farm payroll with the Trusted Prop again as well, and we've got 3 accounts to give away this Friday, and that's also coupled with 3-month subscriptions to Newsquawk services as well. That's an absolutely outstanding offer. This is the rules for this are similar to what it was last time. If you go onto Twitter, you'll see the tweet that we have posted on there this morning. All you do is need to follow the rules, do the retweets and stuff, fill in the form, stick in your prediction for non-farm payrolls, and then away we go from there. And you should be involved in that. And bear in mind as well that we've also got as well coming up very soon. This could actually be as early as opening this week. It may be even in the next few days. So the live streams are a good chance to keep everybody up to date with exactly what is going on. But our new trading contests are pretty much ready for registration to open. There's a lot of people signed up to the email form. You can still do that as well. So you're front of the queue and you can join that. I think it might even be in the next few days. If it's not, we're going to have to wait for December. But I will keep everybody in the loop with that. Okay. That's it. That's a complete rundown of everything that we need to look at over the course of the trading session ahead. What we will do from here is we will keep a check on how the markets are moving over the course of the next few hours. Remember that the clock's changed in the UK, so we have a shorter amount of time between now and the US session. It's normally about 5 hours, so it's actually just been reduced to 4 hours. So that is everything for now. Enjoy the session ahead, and I'll be back at, I think it's around about 1 o'clock UK time, and we will cover everything that you need in the US markets. Have a good session, and I'll see you soon.